We're generally pleased with the progress of the economy and the decision not to raise rates today.
So the Fed decided today to leave rates unchanged. That was where analysts certainly expected the decision to land, although there was some speculation in the markets that the Fed could unexpectedly lift rates today. In the event, policy has remained unchanged at the same place it has since December of last year. But the Fed sent a pretty strong signal that rates could start to move again fairly soon, and certainly within 2016. There are a number of signals there. First of all, forecasts released by the Fed suggested a quarter point is possible by the end of the year. Second of all, there were three dissenting voices on the Federal Market Committee today. Three Federal Reserve presidents voted for an immediate rate hike, suggesting the calls are becoming more urgent for higher rates. And thirdly, it's fair to say that the statement itself suggested rates could be moving in short order. It said that the case for a higher rate had strengthened, and it also said that the risks facing the US economy were looking broadly balanced. That's Federal Reserve speak that suggests that it's becoming more confident about the economic outlook and therefore more comfortable about raising interest rates. As I said, there were three policymakers who voted against the decision to leave rates unchanged. They were Esther George of the Kansas City Fed, Loretta Mester of the Cleveland Fed, and Eric Rosengren of the Boston Fed. Now we'll need to wait to hear their reasons why they wanted an immediate move in interest rates. But certainly one of the concerns that's been raised by Esther George and also increasingly Eric Rosengren is that financial stability risks have been brewing because of this very long period of low rates. Eric Rosengren of the Boston Fed is in particular concerned about commercial real estate prices becoming rather frothy and thinks that there is a good argument to very gently start to remove some of the monetary accommodation in the system to prevent those financial stability risks simmering over. It's worth also adding that although there are only three voting members of the Fed who voted for higher rates in today's meeting, there are certainly other policymakers who are not currently active voters on the Federal Open Market Committee who also want to see higher rates in the short term. John Williams, for instance, of the San Francisco Fed, has been agitating for higher rates recently. So there's certainly a strong contingent within the Fed which wants to see action soon. The Fed has really been blowing hot and cold on interest rate moves throughout the year. There was forecasts in December from the Fed suggested that there would be 4 increases in interest rates in 2016. That clearly hasn't happened. We still haven't seen even one in 2016, and we're now looking like we will get at most one by the end of the year. So markets are a little bit skeptical at the moment about whether the Fed will follow through with higher rates. However, the language that it has used today, saying the case has strengthened, putting out these forecasts suggesting one hike by the end of the year, and saying the balance of risks is even, that does suggest that it really does want to tee up the markets for a rate hike. Now the question is, will it happen in November or December or thereafter? November's rate-setting meeting occurs just a few days before the US presidential election. It will be very surprising indeed if the Fed moved so close to an election, especially since that meeting doesn't have an accompanying press conference or statement by Janet Yellen, or indeed economic forecasts accompanying that decision. So it really would be, in a sense, a bit of a vacuum with just a simple statement with a rate hike and not a lot of accompanying commentary to explain why it had moved them. That leaves the December meeting, and that does seem to be a real possibility for a rate move, and certainly markets now are beginning to price a little bit more the possibility of the Fed lifting rates finally in December 2016, which would be almost exactly a year after the first rate hike in the current rate hiking cycle, which is December 2015. As I said, much slower, much more glacial pace of rate hikes than anyone ever expected.